Good morning, May 17th. Not a lot of good things to talk about this week. Market movements wasn't a lot of movement in corn or soybeans. Corn down 4 cents, soybeans down 2 in the July contract. Chicago wheat up 3 cents. Minneapolis, though, suffered some losses, 20-cent losses. Pretty good rains out in western North Dakota this week, some 2 to 5 inch amounts west of Bismarck, North Dakota, a lot in South Dakota. July crude oil up $1.39. June gold down $147. Some trouble in the gold market. And August feeder cattle, after going to new all-time 6,000-year highs, had a significant downside reversal this week, a weekly downside reversal, down 270 for the week after running above $300. It's probably time to hedge some cattle if you have cattle to hedge. June live cattle down 282, same thing, downside reversal on that weekly chart. Planting progress, bad news here if you're a fundamentalist. Corn planting as of May 12th at 62% last year, 15% ahead of last year, almost 6% ahead of average. Soybeans 48% planted versus 37 average. And actually, we probably had another very good week in the Corn Belt. Actually, it's been quite dry in the Corn Belt. I'm thinking we're probably pretty close to finished with corn and getting close to that in soybeans. Hybrid spring wheat 66% planted versus average 49, so well ahead there. Barley 63 versus average 59, and sugar beets 91 virtually complete. Winter wheat ratings, the crop that's growing in the field, winter wheat is also improving, up 3% from last week in ratings, above last year. Our yield model jumped another third of a bushel. USDA had a government report and they raised their yield zero point 0.4 bushels from trend. They're still a bushel too low, and that yield is rising. So there's probably even more negative news coming in the winter wheat market. Topsoil moisture still pretty decent at 70% adequate surplus, subsoil 67, a little bit below last year, but actually the weather forecast is turning a bit wetter. USDA had a May USDA report on Monday this week, actually a little bit friendly versus April numbers. Last year's carryout cut in corn, soybeans, and wheat, so that was a little friendly on the demand side. 25 expectations versus expectations on these first numbers. Corn was lower, soybeans lower. Actually, soybeans quite a bit more dramatically lower, but the wheat higher. So we actually had a little bit friendly report, especially in soybeans, but not wheat. And we're kind of seeing the results of that. On the charts, you're seeing corn pushing down to new recent lows here, although it didn't have a bad week, but that downtrend is definitely in track. I think we made some sales here in corn, and obviously catch-up sales, obviously that was well justified. On the soybean side, soybeans actually performing pretty well the last few weeks, despite the bearish fundamentals, fast planting and the improving winter wheat crop, good soil moisture. Here's another problem. Pretty heavy rains forecast in the next 7 days in some of this dry part of the Corn Belt. Actually, they haven't had much rain at all in the last 2 weeks in this area, but look, we're actually turning wet the next 7 days. And some pretty good rainfall here in the western hard red spring wheat country this week, and more forecast over the coming week as well. When you look at the 8 to 14 day week 2 precip, you've got above normal to above normal here in some of these critical areas. So you've got some negative fundamentals, and we are pushing prices down. Wheat pushed to new lows here in Chicago, although it didn't have a lot of losses for the week, but obviously lower. New recent lows in Minneapolis with that rain this week. So we've got some problems in those markets. Here's even a more dynamic thing on the agricultural side. The one bullish market has been cattle. And look at this significant downside reversal on Wednesday this week, and then follow through weakness. Actually, that's a downside reversal for the week as well on both the live and the feeder cattle. We looked just briefly at the feeder cattle. So obviously a pretty big downside reversal on Wednesday. Actually, if you're a livestock producer, it's probably a good idea to put some hedges in place. These are all-time 6,000-year highs, and so there's nothing wrong with sales here. And on the crude oil market, obviously gaining some this week, but here's a question mark. Can we get above this resistance mark? And the negotiations in the Ukraine war did not go well Friday. Ukraine really doesn't want peace. They want to fight. Germany, some of the Western European countries, Germany, France, and UK want them to continue fight. I hope they pay for it, not the United States. I think we're obviously very tired of it. Of course, we've been funding most of the war, and actually we're the ones shooting missiles into Russia and sending drones into Moscow. The Ukrainians don't have that technology. It's all our technology. It's actually all our missile-guided systems. So the key question here is, will the United States continue to support the Ukraine war? Without us, Ukraine is going to lose badly, and I don't know why they want to continue that. Zelensky apparently is sentencing Ukrainian men to either die or leave the country, because I don't see an alternative for them at this point. So gold market actually, after running to new all-time highs, we actually went to new recent lows. So maybe this gold correction will continue. Or another question is, has gold actually topped? So a lot happening here in the markets, actually probably more on the livestock side with that reversal. The question mark about the bullish market in gold, whether it will continue. But obviously grains are struggling because we've just really had some very, very good growing conditions. Very fast planting of corn and soybeans and spring planted crops like spring wheat. And the winter wheat keeps improving, and the rain is forecast to come. It's forecast to be cool and wet the next 2 weeks. After early planting, that's about as good as you could expect. So unfortunately, that is pressuring grains, and we still are working on trade agreements. So it doesn't look like the Ukraine war is going to end, but obviously prices are struggling a bit. But a lot of it is because the U.S. weather is just so favorable, and that's presenting some problems. So I guess that's something we just have to deal with. Markets have bearish periods and they have bullish periods. Right now, on the grains anyway, we're just going through a bearish period fundamentally. Hope you have a great weekend and good marketing.